ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Brandon.
Oh, hey-o. What?
Well, you don't want to see that.
Working on taxes? Oh, because a lot of, if you guys put it off till October, they're due soon, huh?
Now, it doesn't put off the tax burden. I mean, you still have to have paid in April, right?
Yeah, you have to have paid in April, but the taxes paying is 4 seconds. The problem with taxes is the 18 hours of paperwork you have to filter through or whatever it is. Then you have to submit to your accountant and go through all that nonsense. It's such a joke.
Best money spent. Hire someone to do your taxes.
Oh, yeah, but I mean, still, you got to get all the crap together.
I don't have much crap.
If we were like the European Union, we would just be chilling, paying extra sales tax, calling it a day.
Yeah.
That's it. Flat tax, fair tax.
Although arguably there are some problems with the European economy, but I don't think it's.
Oh, arguably.
I don't think flat taxes are the reason. Yeah.
I don't think so either. I think it's dictator leadership.
Well, anyway, good thing that you guys are all. Oh, it seems to be the female side of the audience is doing taxes. Does that mean that women put things off? Huh? No, but 100% of the women polled so far are either doing or have just done their taxes. So I don't know. We may need more data, or we can go like the Fed. We got what we need. It's time to make a decision. Strong and resilient, short-lived.
Data dependent.
Yeah. Data dependent with backwards facing data that's 6 months old, that then once they use the old data, then 1 week later, it gets adjusted downward.
What are we
Unless
looking
it's
at
unemployment. If it's unemployment, it gets adjusted upward. So, there could be problems with that. Maybe they need to be data dependent, hyphenated. So they wait for the data, and then they wait for the data about the data, and then they make a decision based on that data, which only puts them 18 months behind.
Yes, nice. It looks like today is
the first day of the rest of your life.
Okay. Yeah, sure.
Or the last day of the first of your life.
Yeah, I've never thought of it that way.
Yeah.
What are we looking at? A 96% chance of a 25%?
Mm-hmm.
So I do think if we get a 50, I think it would actually be kind of bad. So it's like, I think people would be like, oh, they effed up. And I think there'd be more fear in the street a little bit for a minute.
But there
not over a week.
There wasn't much fear last year when they did the 50. I don't think they'll do the 50 because of the bias that the Fed has and the fact that you can't go from the things that Jerome said to a 50 basis point cut 2 years in a row. It's too embarrassing. That would be the kind of thing that already the Fed is the laughing stock of the financial community. But this would go down in the annals of history as the dumbest 24 months in the history of banking. Just the dumbest 24 months ever. And it already might.
Yes, I think so too. Tracy's asked this like 14 times. We've answered it like 5 times, but we'll answer it again.
Okay.
Just for Tracy.
All right.
And fees are not C8 compatible. Yeah, they are. As long as you haven't transferred them, The only ones that show C8 compatible are the ones from Hypercycle's wallet, because that's the only way we're able to do it, because there's not a contract function in the metadata to be able to differentiate yours from anybody else's being C8 compatible. So we've explained this. As long as you haven't transferred them, they're C8 compatible. But there's also about 7 other things they're compatible for. So I'm going to make a list of those things. And it's pretty cool. So we're going to go through those things. Hopefully I'll get the information later today and we'll kind of go over that.
Okay, Beth, this is a colorful interpretation of the law, meaning you don't have to pay, but if you haven't paid enough, you're going to have potentially, you're going to have interest on the encumbrance of what was owed, and there may be fines, meaning you broke some rules, meaning you do have to pay in April. Maybe you don't go to jail, but you do have to pay in April. So, pay in April. Say pay in May, go away? No. Those are the seasonality of markets. No. Okay. What is going on what is your idea pre-Fed decision? Like I had all these plans if the market had moved and reacted, and it doesn't really look like it's done anything.
It hasn't moved at all, really. Like, really, I mean, even if we look at Ethereum, I guess it's kind of fallen the last 5 days. 1, 2, 3, 4, 5 days in a row. It's fallen from, I guess it has done something now that I look at this, from 47.70 all the way down to 44.89. It's about how big of a move is that over the last 5 days? And 6% down in preparation for the Fed meeting. So it's actually declined. I thought we would see kind of a bump up and then a sell-off after the Fed meeting. So it's kind of been inverse of what I thought would happen.
Nothing's ever priced in, MJ. Yeah,
I don't think anything's priced in.
Yeah,
but
you always think it is, and then there's some reaction to everything. So I think generally
there will be a reaction today.
Yeah, I think what it is people try to guess the general direction, and that's what priced in, the general direction. I'll tell you what was almost priced in. Last week before the Apple announcement of the new devices, which was kind of a yawn fest, and we all kind of knew it was going to be, people were kind of like, I don't know, man. I don't think Apple's going to do anything that exciting. Their whole AI thing was a big fat nothing burger last year. So it's like, eh. And guess what? You had an announcement of a bunch of stuff that was, mostly right? The phone was like nothing. Oh, it's 1 pixel better. Oh my God. So what happened? But the stock sold off like 0.25%, which is not much, meaning that's pretty much priced in, right? Like that's as close as you're going to get to priced in. People thought it was net negative. It was net negative. Price didn't move. And then you look the next day or two and see just the price move, because you only really know after the fact if it was priced in. I don't think this one's priced in. I believe there is still a bunch of morons that think there won't be a cut today. There's even people coming out from like Bank of America and all this, like, there's no way there'll be a cut. Look at the data. And you're like, what on earth are you looking at? No one knows. You got quiet, Brandon.
Listening to a bank is the worst possible thing you could do.
Yeah.
They are influencing the market every way they possibly can.
I think the markets are numb to Jerome Powell's prognostications about the future. I think that they are. The bond market has been laughing in their face for a year and a half. That's why you get inverted yield curves and things like that. That's why that is. That's why you get bull steepening where people are running into the bond market. It's not bullish for the economy. It's bullish for the bond market, government debt markets. That's why you get those scenarios. It's when everybody else in the money business that actually deals in money is ignoring completely what the Fed has to say, just because it doesn't matter. And it doesn't matter, right? But I think there is just a cohort of people that do believe that we have a central bank, that the Fed prints money. I still hear it every now. Oh, the Fed's going to print money. And you're like, but oh my God, but you can't even get into it. It's like arguing with a little kid about particle physics. Like a 6-year-old doesn't understand the nuances of a neutrino. There's no point trying to explain it to him. He ain't going to get it. So it's the same way. And I think that portion of the retail market, especially some of the older retail market, I'm not being ageist, but, the 65 to 75 cohort is typically not as in tune with the way the world works right now. They're not on TikTok usually. So they're probably not as keyed into the world. They may react. So I think that there is a reaction after this. I think it's a 25-point basis cut. The only way you get a massive, massive reaction, because I think today probably going to be a relief rally upward. But the only way you get a massive reaction is no cut or 50 basis points. 50 basis points means holy S, the Fed is panicking, which they are anyway. Or no raise at all means Jerome and his buddies want to light the world on fire. Luckily for us, rate cuts don't matter. But again, for that one pile of octogenarian investors, maybe that does matter. What do you think? You see a 25 basis point cut as well, and what do you think is the reaction function afterwards?
I think we're gonna get where it's sold off up into this. I thought it was gonna run up. Where it's sold off up into this, I think we're gonna see 25 basis point, and I think the market's gonna respond positively over the next week. I don't know what's gonna happen today because I think there's gonna be like woo woo woo, but over the next week, I think everybody's gonna realize that that's actually a decent thing. I do have some hard data if you want to look at that.
You said my 7 favorite words.
Yeah, pretty much. So here's what we got. Okay. And this is anytime the Fed has done a quarter, and I'm just looking at historical data. I don't want to draw any conclusions. I'm going to give you the data. You make your own conclusions. Okay.
Got it.
Now, this is anytime the Fed has done a quarter basis point cut when the market is within 2% of all-time highs, which that's where it is right now. So they tracked this statistic.
This has got to be a pretty narrow basket of data.
Yeah, it's. I think they do typically start cutting when the S&P is at all-time highs for some reason.
You know what it is? Because governments keep printing money. Stock market's almost always near all-time highs.
Okay, so out of the last 20 times they've done a quarter basis point cut when they've started cutting, how many times do you think the market?
14.
What? 14 out of 20? Any other? Actually, let's see who's the closest in the chat.
Shit, I know.
Out of 20. No. Let's just see. Let's just see. No, that's not necessarily true. Let's see how many. So out of the last 20 times where there's a 25 basis point cut, how many times has the market gone up after? That's it. Simple question. 25 basis point cut.
I want to up mine.
Whoa, up it from 14?
I'm taking
up
17.
It from 14.
I'm taking out 17.
Okay, so we have a lot of guesses.
I'm taking out 17.
Wait.
Any of you guys guessing 20? Stop it. None of you are good gamblers. This isn't The Price is Right.
Well, I actually feel bad for what you just said now, Nick.
It is The Price is Right?
It is The Price is White. 100% of the time, it goes up.
Did you just say The Price is White?
The Price is Right. 100% of the time, it goes up over the next 12 months. 100%.
Huh. Damn it.
20 out of 20.
Said 20 were right.
20 out of 20 times. So, I mean, I know we can't use past. We can't use statistical data because the Fed doesn't either. Yeah. But 100% of the time, since 1980, when this has happened, it's gone up.
It's like Wild Puma. 50% of the time, it works every time.
I know. So I don't know what you guys want to do with that data, but that's where it sits. So typically this just is like an initiation of, I guess, whatever, money getting introduced into the economy and it goes up. So all y'all want some monies.
No,
who was guessing?
This is
four? He said 4?
It's the notion. It's the notion that money gets introduced into the economy.
Yeah, that's all that matters.
And
the notion is reality.
Now, I will say this. Indirectly, Fed cuts borrowing rates. Again, only for one tiny little maturity. But okay, they cut it, which on the aggregate lowers the lending rates that the government has to pay to sell U.S. debt. That rate comes down, which probably entices government to sell more debt. That is a kind of cash creation. Now, is it going out into society? Absolutely not. But it is money creation that will seep its way into government programs, things like that. It's money on the government's balance sheet. And indirectly, that money, well, it'll start matriculating out into society through whatever, public works and fiscal policy. Remember, the Fed is monetary policy, but the government itself, sans the Fed, is fiscal policy, right? Taxing and spending. Build more bridges, build more orphanages. Oh, wait, we don't build orphanages. Build more bridges. And then pay someone to take those bridges down and pay someone else to rebuild them. So there's a lot of dumb spending, but point is, money does matriculate into society as governments run bigger and bigger and bigger deficits. And if you make the lending costs lower, you entice that behavior among bureaucrats. But that's not the free money that people think they're getting by these rate cuts. So maybe it's kind of a delayed gratification thing, and maybe it takes some months. I'd be curious to know right when it happens. So you're saying, so here we know that the next month when there's a cut, the numbers aren't so good. It's about it's about half, right? Looks like it's about half.
I would say half. Let's go.
Matter of fact, it is half. It says 50%.
6, 7, 8. Oh, yeah, right here. We have to count 50%. Yeah, that's fair. 50%.
So
yeah,
it's a coin toss right now, but then it starts to get way better in the next 90 days. And then recent history, going back to 2019, 2024, 2024, we get up. And the down in 2019 was very minimal in September, followed by 1.9%. These are all very minimal changes. Matter of fact, what was the biggest? The biggest movers were what? 86.
Wait, over 90, a year or over a?
Oh, the biggest movers in the next 1 month period.
Oh, over
looking back historically, there's only a couple of really big movers.
Yeah, 7.3, negative 8.3, negative 8.1. So the biggest up is 7.3.
Like a 4 year period. That was in the late 80s.
Yeah.
So, but otherwise, the relatively recent history, if you go even to 1995 and go forward, you get about a point, down about 2, flat, up 3, up 4, up 1. That just tells me there's just more money in circulation.
Oh yeah, I mean that's my next chart right here.
Oh,
okay.
Go on then. Go on.
This is how much the dollar's lost just this year in value. So, and that's because of more money, more dollars in circulation, essentially, right? Because there's more units being printed, the dollar has less buying power. So it's actually
be careful.
lost.
We can't really use the Dixie because that's not really a dollar. It's not.
Well, it's true. I guess
it's a perverted look at the dollar because it's counterbalanced by all the other assets in that bucket.
Yeah, it's a trading future too. I mean, it is a trading instrument as well. So there is a little bit of. Yeah, I mean, it's not 100%, but I think it gives you a general idea. I guess we could look at trueflation too and do the math from there to see how much purchasing power you really lost. Then we would have to.
We would look at if there's any money supply arguments that could be made. Like, could you layer over? Well, the problem with money supply is most of this money is indirect money supply. So it's like the M2 arguments don't really work because that number is kind of faulty. The M3, there's not really a good money number right now. There's not really a good number for currency in circulation because of all these weird exotic products and derivatives and things like that. You don't really know what's out there. And then when leverage unwinds, that number disappears and you have these giant liquidity squeezes and like stuff. So I don't know. I don't know that there's I mean, I guess if there was a good metric, someone would be using it and making all that money, and no one's using it and making all that money unless they're doing it quietly. AI will probably be able to look at this and just very easily go, this is what's likely. This is the most likely, but mostly it's going to be, I think, AI managing things in real time and ameliorating these big bumps, just arbitrating everything instantly to where there's like a smoothing effect over markets. If I was to guess. Yeah. Okay. So when you say what's different this time, everything's different every time. We're in a way worse economy than we were last year. Way worse. And that was proven by revisions and redactions in previous data that we just got like in the last week and a half. It's way worse. So, the argument for 50 basis points is actually really strong. But we don't. But the Fed's not really data dependent. When they say that, it's just a lie. It's a flat out lie.
Blatantly lying.
Yeah, they are a political organization. That's it. And they should be rendered irrelevant if people would wise up. But I don't know why I don't know why people keep listening to those idiots. The money markets don't really listen to them, but people listen to them, and the media listens to them because I guess they got nothing else to say. Like if you take away Jerome Powell, what does CNBC have? Jim Cramer, Rick Santelli to yell at the bond market, and by the way, these guys, they'll look at a bond market auction and be like, this auction was terrible. This auction, dude, there's no such thing as a terrible U.S. Treasury auction. Everything sells all the time. Everything, because there is nowhere else to go. So when you hear all this crap, it's them just trying to spin a story out of nothing. But because I guess what else do you have? Like earnings season, yeah, and you can do all that. But like, if you take the Fed away, and you just look at the bond market, it pretty much tells you everything you need to know. And I guess that's not enough really to run a network. So we need Jerome. We need Gentleman Jerome. We need the whole thing. Like, oh, Jerome, I started trying to fire Lisa and go to Trump and all this kind of stuff. I mean, I think it's funny that someone basically got caught for mortgage fraud, and they can still have the dignity, their own dignity, to show up for work. Can you imagine? You're on the board of governors, and you get caught for mortgage fraud. Would you even show up to work ever again? How embarrassed is she right now in that meeting? She must feel
I
like
don't know.
I don't know that full of a-holes.
I don't know that. No, I don't know that she's that embarrassed, because I don't think she's alone in the schmeckery that goes on there. So.
Well, right, but she got caught, which makes her the dummy. So even if everyone's pulling shenanigans, but you're the one that got caught, you're the dummy. Even if everybody else was doing it, you're the dummy. So in that meeting today, she's just got to be like, not making eye contact with people and stuff like that. And there's little jabs in the hallway. There's like, oh, here's your coffee, or did you already order 2 more? Like, there's got to be some little mortgage fraud jabs. You thought you're getting half and half, but I put like low fat reduced milk in your coffee. Whatever central banker jokes might be. I guess as they walk around their 2.4 billion renovation, as they probably all have their own like pod elevators that take them to the cafeteria. That's why it's so expensive. They have to have these air tubes, like these pod tubes going through the entire building. That's really what the whole renovation was. My pod tube's not working. Okay, go over and use Williams pod tube. I don't want to use Williams pod tube. I want to use my own pod tube. Well, I don't know what to tell you. Jerome has 2. Jerome gets 2. Jerome gets 2.
Yeah, he does.
Anyway, yeah. It would be great to end the Fed. They don't do anything anyway. They don't do anything. But now I'm saying this of the Federal Reserve, not I'm saying the Board of Governors. The private banks, those 12 private banks, they do all sorts of stuff. And some of it might even align with U.S. interests sometimes. But it's unlikely because one of their investors is Jamie Dimon. Isn't that crazy? You know, we I guess if we had enough money, we could be investors in the Federal Reserve.
That's no, that shouldn't be the case. It should be there shouldn't be a way to do that. Independent, right? Come on. They're not independent. Whatever.
Anyway, okay, so long story short, right before we go behind the wall, what would people expect today as they're reading this? Because remember, they'll get the prepared statement about 5 to 10 minutes before he walks in. So about 11:15, the statement will be published. Usually, it gets published around between 11 and 11:15. Statement will be published on CNBC. Do you expect the markets to react at the moment they say that, or do you expect it to be kind of quiet and subdued, and then when he talks and starts going into the presser, the Q&A, do you expect the verbiage perhaps of his statement to then, like, is this going to be a hawkish 25, a dovish 25, an FU 0, or an OS 50? I think it's going to be I think it's going to be a wait and see, data dependent 25, a non-committal 25. And he may even still say, we're still waiting for inflation. He may even say it, although I bet even he doesn't want to say that because they've been so embarrassed about that, their inflation bias. Which one of those scenarios do you see?
I mean, I think he's going to be I don't know, because I think it's going to react right when he does it. And I think when he comes out 30 minutes later or whatever it is, I think he has a little dovish tone. That's what I think. That's what I think is going to happen.
Oh, I just don't think he has it in him. I don't think he can swallow his pride.
You don't think he can swallow it? I mean, the reality of that.
Well, I know he can swallow it, but I don't think he can swallow his pride.
The reality of that last jobs report, though, come on.
Yeah,
he should.
I'm with Scott. This is an FU to Trump. It's an embarrassed FU, and this will also be, by the way, the most embarrassed Fed chief press conference you'll ever get to see. This is the most wrong a Fed governor has ever been from one statement to the next. Like, because we have historic redactions in that we had like a week and a half ago in unemployment and like going back to a year ago. So this is the historically worst a Fed chief has ever been at calling the future. The absolute worst in recorded history. This is kind of a cool event. This will be a fun event because they may just skewer him. It's going to be interesting. If he has a hawkish statement, they're going to rip him a new a-hole. So I think you're probably right, Brandon. I think the only way he doesn't get tarred and feathered is a dovish 25.
Yeah, but I think he has to do that, right? He has to.
Well, I don't think he can't stand in the way of it now, because right. Waller and Bowman are going to walk in there off like I told you, I done told you, like, and everybody that was on the fence, even the empty suits with their pre-prepared statements, they're going to have to bend the knee, because now they got their own constituents saying, how are you this wrong? How are you guys all this wrong? What are they going to do? It was Jerome's fault. It's Jerome's fault. Jerome told us. They're going to dump this right at his doorstep. So it's kind of on Jerome. He can't hide behind the other governors. So I think they already have, well, clearly we'll know if they have the votes. Now, what would be interesting is if any of these idiots dissent from the quarter point. I'll bet you Bowman and Waller come out wanting 50. I'll bet you get 4 people wanting 25, and I bet you get 1 person. There's going to be somebody that says no rate cut. Might be even 2. Might even be 2 that say no rate cut. But I bet it's going to be 3 or 4 that are on 25 basis point. And I think Jerome also will be in the 25 basis point camp. He can't be the dissenter on this one. So it's going to be interesting. So there's a lot of little detail to look. If it does not matter, why ponder? Because people react to the way this is presented. Matter of fact, Barry, more so than the cut is the way this cut is produced, because it gives you an idea into the mindset of those idiots that people believe run the world. There's people that believe the Federal Reserve is the biggest central bank in the world, even though it's not a central bank. People believe that. So it matters. Remember, what would dummies do? WWDD. Well, dummies are going to want to know how many people voted for what, why they voted for what their statements were. They're going to run the minutes we'll get another reaction in a couple weeks on the minutes, which, by the way, do you know that they rewrite the minutes?
Like, you know, that they change the whole message, or what?
They edit it to reflect the economy at the moment the minutes are published.
Oh boy.
Doesn't that seem a little bullcrappy to you?
Yeah. Pandering to the crowd. That's what that is to me.
Yep. So what we see is not the actual minutes. We see a version of the minutes that reflects any near-term activity. And so they'll go and adjust their statements so that it looks like they were really sharp and on top of things. It's kind of a scam. I mean, not kind of. It's a scam. Like if you're in a trial and you adjust your statement 2 weeks later, they're like, wait a minute, but that's not what you said. You're like, oh, no, you're misremembering, because that's the way I remember what I said. Like, well, no, we had a recording. Shh. Anyway, dot plot. Yeah, there's no dot plot. There is. They quit doing the dot plot a while back. To show more independence, data dependency. You can't have a dot plot if you're data dependent. You also can't be steering the economy if you're data dependent 18 months in arrears. That's a whole other problem. Anyway, that's neither here nor there. Okay, let's go behind the wall, and then let's talk about how these things might affect our portfolios. And also, if there's any moves you're making, if there's any moves, any options moves. This thing is flatter than my 6th grade girlfriend. Nothing going on. Nothing going on.
Didn't develop till later years, huh?
I don't know. I broke up with her. I haven't talked to her since.
Maybe give her a call.
I broke up with her.
Know.
I mean,
hey,
we were
give her a call. You never know.
What I mean is we were never actually going out, and I don't think she knew my name. But in my mind,
send a note? Did you not pass a note through the teacher? Pass a note.
I threw a rock at her. It should have been obvious I liked her.
Clearly.
But the rock hit her. And I don't know about the trauma after the fact. I don't know if she got the message. Women, am I right? Romance is tough. All right. And on that note,
going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.